All right. Again, thank you to Jimmy Morgan, General Counsel Hashgraph, for giving us that very insightful panel on the inner workings of ETFs powered by HBAR. Without further ado, we're pivoting from institutional adoption of crypto into new payment rails of tomorrow. Please give it up for a esteemed group of payments experts who are true frontiers in the next generation of cross-border payments. Without the Pain panel, moderated by Alisha Changani from the Atlantic Council. Thank you so much. Panelists, please come on.
Wow, what an energetic day we've had. This crowd is excellent. So hopefully we can keep the momentum up as we talk about cross-border payments without pain. Not an easy question to answer, but I have an excellent panel with me here to tackle it. So Sushil, should we just jump right into the panel?
Sure, absolutely. Thank you.
Okay, Sushil, can you help set kind of the context for us here? Cross-border payments have been evolving for quite some time, but we're still seeing many pain points. What are those pain points and why do we still have them?
Sure, I can definitely answer that. But before that, I just want to remind everyone, this is 2 p.m. post-lunch, probably siesta time. We're going to try to keep it lively. Now, cross-border is not the most exciting, but it's one of the most exciting sector right now when it comes to real-time payments. I'm Sushil. I am the co-founder of a company called DROPP, which is an instant payment company that leverages real-time banking, RTP, and the Hedera chain for stablecoins. So we are bringing everyday payments, we're bringing instant payments to settlements to everyday purchases, like when you go shop in a convenience store or where you do a digital commerce. So the cross-border, just going back to your question, cross-border is it's challenging because everything that you do domestically, it gets amplified. And so in the last 3-4 years, big changes have happened all over the world. With stablecoins, we have, you can make payments any part of the world. That's a rail. With real-time payments, which is RTP and FedNow, you can domestically pay anyone, and the rest of the world is way ahead of that. I mean, if you go to India, Indonesia, you go to Brazil, they already have instant banking rails. So the world is ready with the rails, but not just one part of the equation. And it's fantastic. You can do a millisecond in a stablecoin, you can do within a second on a banking rail. But there's a lot more that needs to be built for payments to happen, which is you need to make sure that and we learned it the hard way, I have to tell you. We were very excited in the first 90 days when we built DROPP. But then there was so much we had to build in the next 3 years, which is you need to make sure that your product, your payment platform really works in the operating environment of a merchant, of an institution. And that's what the challenge is. No one is going to change their infrastructure because you have a rail that is cheap and instantaneous. They love it, but they're not. So that's why the real issue with cross-border and all of these payments is like, how do you make sure that the two parties are trusted? How do you verify them? The ledger does help, by the way. The Hedera ledger and all the other ledgers do help. You got to make sure that the settlement really did happen, and you need a proof of that. And then you have everything else, because at some point that token, that currency has to be converted to fiat. So you have all the issues of off-ramp, on-ramp, which you have in a domestic market, but now extend that to globally. So it becomes challenging because you're working with different partners who you have to trust. All the KYC, KYB, which we do domestically, has to happen in the rest of the world. And that is where the challenge is. So we've solved, in the last 4 or 5 years, we've solved the big problem with instant settlement, and it is here to stay. This is it. This is how we're going to do payments. But a lot needs to be built in terms of technology and openness for global payments to really happen, or cross-border payments to really happen.
Thank you, Sushil. That was very helpful framing for our conversation. Rob, I'm going to throw this question over to you because, very simply put, how are you seeing digital assets actually solve some of the issues that we're seeing in cross-border payments? And where are we still seeing some of those gaps?
Thank you. So I'm Rob Allen. I'm currently the head of the Hedera Enterprise Adoption Team, which gives me the unique and amazing job of working with all the Hedera council members on their project. So I do see cross-border payments comes up a lot as a use case that both regulated industries and corporates need. Of course, every multinational business needs to move value across borders. They do it in different ways. There's a lot of friction in the system, but it's actually the biggest prize. I mean, it's a huge, huge opportunity with a lot of pain and friction. Depending on which report you read, there's $200 trillion worth of value goes cross-border, $200 trillion. And that is expected to go up to over $300 trillion in the next 5 years or so. It's huge, right? So if you've got a massive pie with a lot of friction, there's a lot of opportunity within it. So your question was, what does, oh, and by the way, if we're talking about stable coins, you mentioned digital assets, but actually if we're moving value, the digital asset of choice at the moment is stablecoin, which is kind of forms of tokenized money. If you look at the fact that there are 98% of the world's stablecoins are denominated in US dollars, but only 50% of the current cross-border payment flows are in US dollars. That's a huge discrepancy, which for me means that there's a massive opportunity in non-US dollar stablecoin denominated stablecoins. And as a proud Australian, recovering Brit as well, I like that idea because those currencies actually have a lot of value too. And so there's another opportunity there in the cross-border foreign exchange corridors. So the question is, how does it solve? How is it solved by this technology? Well, as Sushil was saying, the technology is largely solved. I truly believe the technology is solved. What we don't have is liquidity across the networks. What we don't have is the easy ability to do interjurisdictional movement because of different regulatory treatments. And we don't have consistency in the infrastructure around what's being done. So it's very easy for me to send a stablecoin, USDC, from my wallet to yours. Yeah. But I can't really easily do it unless I'm using Circle to do it via the different chains that they have chosen for me to move between. What we announced today with Clipper changes all of that. So before I hand over to my illustrious panelists, I think that is actually a massive game changer in this particular use case, along with many, many others.
Absolutely. And so, Dennis, Rob talked a little bit about kind of the solutions that digital assets can bring to cross-border payments, but you actually work sort of in the traditional space. How are you seeing digital assets integrate into traditional settlement infrastructure? And what parts do you think are equipped to adapt? And where do you think more transformational change is needed?
Okay. First of all, with Shinhan Bank, I overcharge of the domestic and global tokenization projects here and there. So as a financial institution's perspective, the integration of digital asset into FI instrument is very crucial. Yep. So I think Shinhan Bank is a very good position to speak on behalf of FI since we are doing a lot of projects here and there. When you think of integration, people may think of it as a sort of just development work of integrating one system to another. However, it's more than that. The banking system has been established for decades now. And since we are complying with all those rules and risk mitigating measures to minimize all those operational risks. And when you think about digital assets of integrating into existing FI systems, do we still cover all those scenarios, right? So for Shinhan Bank, we've gone live with our tokenized deposit system last year. So we've gone through some fallback scenarios where we have to manually revert some of the transactions. It was very tough. However, we've learned those lessons and actually improved some of the systems. And thereby we could say we've integrated some of the digital asset aspect into our system. So there are a little more than just system integration when you think of between the layers of the ledgers and the FI instruments.
Great. I'm really glad that you outlined that for us. So it took us about 3 questions to talk about interoperability. So Christopher, I'm going to throw this question over to you. In, let's say, 10 years, we could be living in a world where CBDCs, tokenized deposits, stablecoins all coexist in this world. What does interoperability actually look like? And are we doing enough to make sure that these different assets can work together?
Oh, well, thanks for the question, and happy to be here. My name is Christopher Mensah from EMTECH, and we address that issue quite profoundly, because basically most of our customers are central banks, and initially, and I think from our perspective, what we're looking at is enabling the central banks to take ownership. Yeah. A lot of the discussions we're having with some of the central banks is all about sovereignty, how they can actually own the rails that the flows are going through, which is a big issue, and being able to dictate locally how that stack is going to stack up. From their perspective, and from EMTECH's perspective, we have a build, operate and transfer process where we build locally to empower the central banks in the jurisdictions they're in. So we don't build payment systems per se, but what we do is to empower the central banks to take ownership within the ecosystem. So tier 2 payment providers are able to plug that gap with the last mile payments, and to enable the central banks or jurisdictions to have more control. If you look at Africa or sub-Saharan Africa, in Caribbean, but mainly Africa, you're looking at the fact that, there's about 40, 50 different jurisdictions. There's not going to be one currency within Africa anytime soon. So I think the play is to enable the stack within the central bank for ownership, and then for having other players to come in to plug that difference to interconnect and have a bilateral type of interest between both parties.
So I'm going to push you a little bit, and I encourage the other panelists to kind of jump in on this question, because something that we look at the Atlantic Council very closely is sort of the geopolitics of payments, and how do you kind of converge both kind of political fragmentation of these cross-border payment networks with the sort of push for interoperability, this push for connectivity, and geopolitics plays a big role in that. So what are you noticing from your work? And I, of course, encourage the panel to kind of jump in where you see.
I think from that perspective, the sovereignty is a big thing. If you look at the world we're currently engaged in, what's going on, it's a talking point, and working within, say, countries like Nigeria and Ghana, when we do bring a solution to them, they want to know how they can take control of it, to enable them to have that connectivity, for them to participate in a wider talking points. When you look at projects like Project Agora, Enbridge as well, that played a big part in how that was kind of panned out. But some of these projects are very much based on established economic situations or countries or jurisdictions, and emerging markets sometimes gets forgotten in that conversation. When it comes down to some of the corridors, payment corridors, and some of the pairings are not catered for, and it becomes quite expensive as well. So what we're looking to do is, like I said, empower central banks to take ownership. There's a lot of activity currently going on, so they just want to be able to have more visibility over that.
Any other comments from the group?
Sure. I would like to add a little bit. And I can talk mostly on the stablecoin aspect, and this is debatable, whatever you say, but it's not just the geopolitical tension. I mean, right now you have USDC, and then you have USDC euro. You will always see more currencies like that. Like just right now, somebody walks.
I'm going to get you a mic right here. Perfect. Problem solved.
Can you hear me, guys? I'm
great.
That always happens. I'm going to speak more on the US, on the stablecoin front. Sure. I expect it's not just the euro tension, it's like the global tension. It is competitiveness too. There will be more stable coins offered by different businesses, different countries. It's just going to happen. And it's not a question of who wins. It is, as long as we have an exchange that can convert that quickly. Right now, you walk in from India and you have Indian rupees, you can't give that to somebody, a merchant right here. What is going to happen in the future is, let's say you have USDC India, they could walk into the 7-Eleven here and it won't really matter because it's been converted. So I don't think it's just the geopolitical tension. I see that all of these can work together. I expect a lot of stable coins right in the US. I do know of them. So it's just going to happen. I think as long as we have liquidity and we provide the exchanges, we'll be fine. I'm being just optimistic.
No, I like that tone of optimism. It's good for the group. So Dennis, Project Agora has been called upon. So I'm going to turn to you on this question. Kind of lessons learned from the sort of collaboration you've seen across central banks and the private sector on this major project. Lessons learned, and what do you hope to see as this project scales, but as kind of cross-border payments get improved globally?
Yeah, so those of you who probably not know, Project Agora is most of the 7 major currency jurisdictions, central banks, and the private sectors get together to establish a common cross-border tokenized system here and there. So it's been the largest project that's been held by BIS among private and public sector collaboration. That is very meaningful by itself. And as a participating bank, there are a lot of lessons learned in the first place. And we've talked a lot about fragmented projects among jurisdictions, and that being very much being solved at the first place, since all the major currencies being get together with private and public sector at the same time. And also the interoperability between all those jurisdictional fragmentation is being considered, which is difficult to solve. However, it needs to be solved at some point. So we're very in an active stage of implementing all those compliance risks and the jurisdictional specific measures that needs to be accountable for the common layer at this time. So those are very valuable lessons for Shinhan Bank. And we hope to build this forward and potentially be a standard instrument for cross-border payment using tokenized deposit and reserves.
Excellent. Looking forward to that. So I'm going to turn to AI because I think this is a huge hot topic in cross-border payments. Rob, I'm going to turn this over to you. How are you seeing sort of agentic payments changing the infrastructure, the sort of work around cross-border payments? And what are you excited about, and maybe something that you're a little bit more concerned with as we think about agentic commerce?
Yeah, well, I'm super excited about it.
Great.
It's not really a fair question because I'm moderating a panel in 2 hours over there on agentic payments, so I'm trying not to steal my own thunder. But I quite like to extend it, actually, because we're talking about cross-border payments without the pain. And a lot of cross-border payments so far in this kind of new DLT world, as represented by these gentlemen here, has been solved within the context of existing systems. Quite obviously, we've got regulators, we've got regulated industries trying to implement new technology in a way that solves problems, solves the pain. However, we've got technology that can do so much more. And I kind of refer to the 5 C's of money. Yeah. Central bank money, commercial bank money, community bank or community money, which is, corporate money, which is like loyalty points and rewards points, which could be, true value transferred. Then community money, and finally, computer money. So that computer money layer, which is now manifesting itself as agentic payments and agentic AI-driven commerce, is effectively the same. Right, what we've now got with technology, especially with scalable technology like Hedera, is the same thing that we're applying at the central bank money is the same throughout the stack because it scales. It's just an order of scale. So if you've got the same technology that can implement a CBDC with higher value, kind of low volume type payments, and one that can implement tiny micro payments that move at the speed of, light across fiber optic, how do you kind of implement the regulatory frameworks, the risk-based frameworks, the infrastructure that prevents all of that going crazy and complete chaos? I think that's the challenge that we have now. We've got 2 or 3 years before agentic payments really kind of hits its stride, I believe, and full adoption. Obviously, we're seeing it now, but full adoption. Part of the problem, part of the solution, rather, I think, is standards. We need to be able to talk the same language. We need to have new standards, but we need to implement technology in a standard ways to be able to prevent this kind of, because the bots will operate at a speed magnitudes faster than we can, and we can't have a human in the loop all the time in order to kind of put the brakes on that. Yeah. So how do we solve for that? And I think that's the pain that potentially we're leading into. Cross-border gives us another layer, right? Because we're talking about interjurisdictional payments. We're talking about the ability to kind of trade FX in real time between currencies. Yeah. All of that needs to be controlled somehow, and I don't think we've got solutions for that yet.
Okay. Sushil, I know we were talking about AI in the back, so I'm going to give you a chance to jump in on the agentic payments.
No, I think with cross-border payments, agentic AI is definitely very much aligned with it. I mean, the machines or the agents could be any part. We get requests. We are mostly domestic. We get requests, but we have the same issue. You can do agentic commerce using DROPP and using Hedera. But I think what Rob was mentioning is you still have the same regulatory framework because you still need to do compliance with the other party. At some point, that agent is owned by somebody else, by some merchant. So it still needs to come together. The technology is there, and I think I'm going to keep saying the operating layer, how you operate, that's not going to change just because we use blockchain or because we use instant settlement. I still need to know who's the receiver and who's the acceptor. So those are the challenges. I'm wildly excited about agentic AI. I think we started the company as a micropayment provider. People thought it was cute. That was like 3 years back. They said, yeah, you could buy a video. With agentic AI, that's exactly what it is. Buying credits on ChatGPT or something. That's all agentic AI. So I'm excited, but it has the same challenges. Whether you're buying, whether you're doing a remittance cross-border or you paying an agent, it's the same. It has the same challenges, operating wise. So.
Yeah, makes sense. So Christopher, we just outlined where a lot of this is heading. I'm curious where you think, as private sector builds these models, what do you want to hear from the policy community? What do you want to see from policymakers, regulators on these issues, especially with cross-border payments? I know the G20 is heavily involved. The US has the G20 presidency this year, and the cross-border payments roadmap ends in 2027. We're rethinking it. But how are you thinking about what policymakers should be doing to encourage the without the pain that we're talking about today?
Well, just based on our own experience when it comes down to innovation and the jurisdictions that we handle, you get a lot of fintechs or vast building without actually having the policy or the regulatory framework around it. So, we build the infrastructure to enable policy to be an oversight to manifest itself. So if you're looking at the kind of projects that we're doing is the regulatory sandbox and having a clear path for the private sector and innovation to happen. But at the same time, it's giving the regulator an idea of what kind of policies they're able to implement based on the activity within the actual sandbox. And we're seeing a lot of transactions through risk mitigations and being able to assess exactly what is going to go on in the marketplace based on the sandbox participants, but at the same time, the regulators are able to enforce policy that is fair and if you compare it to the UK, it's a bit of a different outlook. There's a lot of catching up to do, I believe, for them to actually put the right policies in place to accelerate innovation. Obviously, the recent happenings within the US has accelerated a lot of activity, but having a policy compliance first approach, I think, is the best way. and then everything will start to fall into place.
Absolutely.
Yeah.
So I'm going to borrow a kind of thing we saw in the first panel today, where about some positive headline. I'm not going to go into the sad headline. I'm just going to stick to the positive headline as it was outlined this morning. 2 years from now, what do you hope we've accomplished in sort of the cross-border payments debate, hopefully without the pain that we're talking about today? Dennis, I'm going to start with you, and I'm going to go in a weird zigzag to wrap us up.
Well, personally, 2 years from now, I hope a little more legal framework being cleared out in Korea, in my jurisdiction, regarding stable coins and digital assets. So for us like FIs to have more business out of it. And to be more of a serious answer, I think 2 years from now, I want to see more of a cross-jurisdictional projects that's being initiated and developed, and alongside with those public sectors heavily engaged. So me participating in Project Agora, what sort of got me is how public-driven projects can be sort of very conservative. However, it's very well established from the beginning. So I think when you talk about the cross-border system, you have to think about both parties at this different jurisdictions. So there are a lot of areas to be considered. So I'm expecting to have more of those projects and initiatives going, and looking forward to share more of that in the later stage.
Excellent. Meaningful public-private collaboration.
Okay.
Push for it more. Rob, over to you.
Yeah, 2 years is really quite a quick period of time, but it's also a very long period of time in this space. So I think we'll get, and I hope we'll have global clarity on treatment of stablecoins, because that will enable us, even if they're different within just jurisdictions, that will enable us to define how the interchange between those currencies, those stablecoins will work. Stablecoin interchange is really important because that allows not only the interoperability between all of these networks, but also the liquidity to flow. So interchange with clarity around stablecoins and other forms of tokenized money. So tokenized deposits in private chains with stablecoins in public chains interoperating like we saw on Clipper. I think within 2 years, we're absolutely going to see that. And then the FX element will follow as well. So that 200 trillion or 300 trillion prize is actually within reach then for this new technology. It won't be there yet, but it'll be there. The second part of the answer is that in 2 years, we'll have a far greater idea about how agentic payments is going to transform everything. And as a someone who tends to the utopian rather than the dystopian future, I think that will make a massive difference to everything that we're doing.
Absolutely. Christopher, over to you.
Well, I think, obviously forecasting, one thing I would like to see is a standardization of how CBDCs across the world are created with central banks, because, if you work in a silo. Thank you.
Excellent answer. Wonderful.
I like that one.
Great idea. So having that standardization will enable frictionless interoperability. It will enable even CBDC reserves against stable coins, which I would like to have brought that up as well. How that works, create more liquidity in the market, trust, and so forth. But standardization, absolutely.
Great. Sushil, close us out.
Yeah, sure. We have, I'm speaking for DROPP here. What I would like to see in the next 2 years is us doing digital commerce, in-store commerce between US and Canada and Mexico.
Okay.
And you should be able to do it seamlessly just the way you do it here. The second goal, and after listening to Clipper today, I'm hoping to have access to the liquidity pool from all the other chains in USDC. So that's our goal.
Very optimistic note for us to end on. Thank you all for joining. Can I get a round of applause for our great panelists? Thank you.